Welcome back to the Ledger Lounge. I'm Katie and I'm here with Lauren and Tom.
Hello.
Hello.
This week's going to be all about Q&As. Questions that might have come through on the website or that we've come across over the past couple of weeks or in the years that we've all worked at James Scott. Some of them funny, some of them, well, I won't say funny.
Actually
some of them people are
informative.
probably thinking that we're lying. We're not. It is true. So we'll get on with the first one. Lauren, what is the most tax efficient way to receive my bonus?
So we could look at this from both the employee and the employer's perspective. If you receive an annual bonus and perhaps you want to save some tax or some national insurance, what you could do is salary sacrifice it into your pension, which just sort of delve a bit deeper into that is actually a really tax efficient way. If you're a basic rate taxpayer, it would come off the gross salary, gross part of your bonus. So you are automatically saving 20% tax and 8% national insurance. If you're a higher rate taxpayer, you're going to automatically receive 40% tax relief and 2% national insurance relief. So by doing it that way, your employer can pay in monetary examples. So if your bonus was £5,000 and you're a basic rate taxpayer, you're going to pay 28% of that 5,000 over to the revenue and receive the net amount. What you could say is, I want all that paying into my pension and you receive the full 5 into your pension, or you could ask them to split it. So it's really, really beneficial if you're an employee. If you're an employer, if your employee wants to do that, you will also save 13.8% of employers' national insurance, which is great for everybody all around, really.
So it can benefit both the employee and the employer.
Both people are benefiting from it. And sometimes, not always, but sometimes they might pass that saving of employers NI over to you and put it in your pension. So if you sacrificed your full 5, they might pay that 13.8% of the 5,000 into your pension as well. Or they might split it half and half.
And I suppose it's circumstantial, isn't it? Like some people would sooner have the money.
They're
not minded about the tax and an eye on it because
they need it now. Yeah,
but if you've got that option to put it into your pension and you don't need it now, then
yeah. And perhaps if you are a late bloomer with your pension and you didn't start paying in until you were in your 30s or even in your 40s and you didn't perhaps need it at that point in your life, it is a really tax efficient way to keep more of your money and for it to be invested, and hopefully when you come to pension age it's all still there. I mean, I'm sure it will be, but there's always that risk as well. But yeah, I do think that it's a really, I mean, not a lot of people
I was going to say, I bet there's not a lot of
would
companies
consider
that do that or offer that. Perhaps that's because the employers, the directors, have not been given the advice of their accountant or
maybe not
or whoever.
Yeah,
that's an option. Like they just assume that, oh well, they've all got a £500 bonus or whatever it might be. It goes through the payroll and gets paid through the wages, but not.
Yeah, but if you're an employer, you can reach out to your staff and say
there's no admin to it, really. No more admin to it.
No, not at all.
We're already running the pension, aren't they? So it's just
it's just
contributions.
Increasing the employer contribution. What you can't do with that is obviously you can pay after tax, after you've received your wage, into your pension. And if you have a relief at source pension, which is at 20% and you're then a higher rate taxpayer, you can submit a self-assessment to claim the other 20% relief. It doesn't work with doing your sacrifice of your bonus that way because you've already received the tax relief in the first at the point that you took that off your bonus. So that's always handy as well to know.
It's always nice for everybody to earn a bonus as well, isn't it?
Yeah.
Not everybody does, so.
If you, I mean, you could also ask if your employer, if it's not related to a bonus, if they do salary sacrifice, if you wanted to pay more into your pension, to sacrifice a portion of your salary into your pension.
Is that on top of the government one, like the 5% that you put in?
Yeah, so you can put more in.
Yeah, you can choose what you put in.
They just have to put it up to a certain amount, don't they?
I think it has to be 8%, doesn't it?
So
if
you're currently paying 5, you could say, I want to pay 10.
Yeah.
But if it was through salary sacrifice, you receive the relief immediately because it comes, you're never taxed on that money. But what you've got to remember is that will then put if you were going for a mortgage or some car finance or whatever, it'll put your gross earnings down if you do it through salary sacrifice.
Yeah. I think actually, I'm speaking about putting your earnings down, though, it's not always a bad thing.
That's right.
I can recall one where a person was earning over the £100,000. He was starting to lose his personal allowance. So his employer elected to start paying his bonuses as pension contributions, which then had his adjusted net income below the 100,000, getting his personal allowance back. So actually saving him a lot more tax than he would have
really
otherwise,
good.
and topping up his pension at the same time.
Yeah, that's fab.
Yeah.
And I suppose if something like that kind
Win-win
of
for him
earnings
as well,
level,
isn't it?
Yeah.
the money in his pocket probably doesn't make that much of a difference.
That money might as well be in his pension,
Exactly.
accruing interest and
Well,
growing.
because you never get your tax back from
No.
what you've paid over the years to HMRC. It's
Once it's gone, it's gone. Yeah. So probably another common question that we've all been asked over the years is, as a director of a limited company, what's the most tax efficient way to pay myself? And I think it's a really valid question, and one that probably most people who set up a limited company are the first to ask.
Yeah. I suppose a lot of people that have set up their own limited company have most likely come from being an employee of another company, so they're not really aware of how they should start.
That's always set up, isn't it? Anyone can set a company up, and there's a small fee for doing so, but it's not, it's not inaccessible to people. So anyone can become a director of a company, anyone can become an owner of a company, but
Yeah, you're not past a handbook, are you, when you set up your limited
yeah,
company?
you don't need to pass an exam for everything, do you? You kind of just go and do it and become a director. But that's right, yeah. That's how, hopefully you set a company up and it starts making money. It's how do you take that money out of the company and get it into your pocket
And pay the least amount of tax.
Yeah.
and pay the correct amount of tax.
So what would you suggest there, Tom?
I think typically the most efficient tax way is to pay the most tax at the lowest rate, isn't it?
Yeah.
It makes sense. It sounds like common sense. So I would find that your personal allowance, there, your 12,570 that you get as of this tax year, should go against the most expensive, in air quotes, most expensive way of taking that money out, which would be salary.
Yeah.
So I would always recommend to take your salary out up to the 12,570, your director's only salary for the year. Save that tax on your own, and then anything further than that,
It's
take
paid
out
in
as
dividends.
or pay into your pension as well at the
Yeah.
same time, I think. The only issue with that is that dividends aren't tax deductible for the company, are they?
No.
So,
And the company's got to have made profits to pay dividends.
and yeah, it's got to be in the company's reserves to be able to pay those dividends out. So there's, it's circumstantial, I suppose, into
Yeah.
if it's possible for the company to do it, it's the best way. But you got to weigh it up, haven't you? Does having the tax benefits for the company of running it as a salary outweigh the tax benefits for the individual?
Yeah.
The other way around, as the individual got other income that's already eating away at that personal allowance. So are they going to get taxed at 20% no matter what? There's ways of looking at it, isn't there?
Do you monitor that for your clients sort of on an ongoing
Yeah.
basis?
So I had one that was a new one he just set up, and he was adamant. He already made his mind up about what if I should take it all out. I was telling him we kind of had to put mock up a bit of a spreadsheet for him to kind of say, if you were to do your idea, here's the total tax for you and the company. If you follow our advice, here's the total tax for you and the company together. Here's where the savings are. Even if the company's paying a bit more tax on its profits, that's always going to be at 19 to 25%. You're going to get pushed into 40% there, so you can see.
So the way you laid it out to him, he was paying less tax overall.
Yeah, that's it. With him being a director and the only shareholder of the company, at the same time, it's his business, isn't it?
Yeah.
So the business paying tax is him paying tax, essentially, isn't it?
So always worth asking your accountant then, what is the best way for me in my personal circumstances
I think
to
it's
do it?
I think it's just having a chat, because if you've got, like I say, all the things going on. So he said, what if I'm doing a bit of a sole trade at the same time? Things like, what if someone's getting to the point where now they can start drawing from private pensions, but they're still working and things like that? What if they're paying into pension, or can I pay more and can I pay less in?
Yeah.
Then you just have a sit down, go through like all of the incomes you're expecting to have for that year. Have you got property income? And work, and then just run a spreadsheet together.
And I think just having those conversations with clients before the end of the tax year's up as well is vital, because I've had many a conversation where they've not been in touch, or they've, for whatever reason, and then the tax year's passed and they say, oh, well, what could I have done? Well,
It's too late now.
you can do it for future, but what you could have done was just pick up the phone and ring me.
Yeah.
If you do it before the tax year
Yeah.
as well, you can play around with the payroll and not have to do that earlier year update.
Yeah. We had one, Katie, not too long ago, might have been a bit ago, where I think they were on a director's only salary for the 12,570, but it weren't for the full year. I don't know if you remember, and we could pay a bonus, couldn't we?
We paid so the full 12,570 came out to 2 directors, and the year end was January, but the payroll didn't start. They didn't come on board with us till, let's say, like the July. We wanted to basically reduce the profits of the company, so we put a bonus in to January to use
up to that personal allowance limit.
And then
that's good.
Obviously they had an eye to them pay, but
It saved them. They
was
paid a little
better.
bit of tax on it, but the company saved all that because it'll save the salary, the bonus,
25%, and the 25%
and the employers and I as well. So didn't really cost them any more in tax than they would have got anyway, just doing the director's only salary.
But I think
But it saved the company some tax.
we spoke to our payroll provider about it in, like, I don't know, it was probably about November time.
Yeah.
So they was aware, the client was aware. And when they both received the pay slips in the January, they'd forgot that we'd agreed on this. And he was like, "Oh, I think payroll sorted. I've done something wrong." I was like, "Do you not remember? You asked. We delivered."
You did a name drop there for payroll sorted.
Yeah.
Free promo.
I think you see it a lot though. I think I've had a couple of clients where they come every year, and it's usually it's the same time every year. It's going to be probably a month or 2 or 3 before the year end, and obviously well in time for the tax year end. And those, you put all 3 together. Let's say if they get any other jobs, you get the most recent pay slip with the year to dates, and you work out and you do a bit of tax planning, don't you, for people?
Yeah.
And when you do it right, they know what they've got to pay and when they've got to pay. Especially the directors doing self-assessments for the other employees, things like that, and it's just nice for them, isn't it?
Yeah. With you mentioning the bonus, I've got a client where at the end of each tax year, his year end is December. And at the end of each tax year, we utilise up to the higher rate threshold for tax, which is around 50k, a bonus at the end of the tax year to, again, because we're only paying tax on 20% of it,
Yeah.
bringing the profits down.
So a bonus through the payroll.
Yeah.
The last payroll of the year.
Yeah, so it is always handy and useful to have these conversations with your accountant. We had another question from a client, which was, can I go completely paperless?
Yeah.
That was for you, weren't it, Katie?
Yeah, it was. But yeah, you can. If you've, we use the software at work. The main one that we use is Dext. We've got a couple of clients that use HubDoc, which is free to use through Xero. If you've got that software, there's no excuse as to why you need to keep mounds of paperwork in a cupboard for, it's 6 years. Well, 6 but 7.
Yeah, 6 years after the financial year end.
Yeah, I don't see the reason why people shouldn't be going paperless, to be honest.
I'm not sure if most clients realise that if they are using that receipt capture software, whether it be Dext or HubDoc or whatever it is.
Also, a lot of clients don't realise how HMRC have tried to modernise things as well, because they've probably, certainly clients that have been with us for years and years and years, that have probably always been told, bring your books to us at the year end. We then send them back, keep them for 6 years, and they probably do keep them for a lot longer than 6 because it.
You forget, don't I?
I think some people are frightened in case they get rid of them and
when
then they need
we
them
moved
again.
offices, didn't we? We had a bit of a clear out, didn't we?
Yeah.
There were books in there from 2013 or something like that, 2012, 2012.
I've got one better for you. My dad is self-employed, and my mum and dad cleared the loft out last year, and my mum had up there boxes of folders and files from 1994.
I've still got some in my garage now that are something to do with my dad's tax returns from in the 90s.
You scared to throw
They
them away,
basically
though,
got
aren't
an
you?
investigation for he'd not done anything wrong. They thought that he'd not paid enough tax, but in the end, when they did the investigation, they actually owed him tax. So he's kept them all because he thought that they'd come back again and say, "Oh, actually, we got it wrong again."
I think it's one of them. It's like the Truman Show, isn't it? And the day that you throw them away be the day that the taxman knocks on the door.
But I think certainly clients that don't use Dext as much as we do, if we just tell them to upload to Dext, they're probably not always aware that Dext is actually your filing cabinet for. They probably just think that's how they give it to us, like they would do.
I think I find as well,
10 years ago.
once like that connection is made with them, like that bridge is crossed, that this now replaces that, they find that they're actually better at uploading things.
Oh, definitely. But if they can get their heads around that you actually don't need to keep that receipt
Yeah.
as long as you've snapped a picture of it. What the usual thing I find is, especially with having a partner who's running his own business, is his van dashboard is just crammed with like hundreds of receipts. And even though he's my partner and I'm an accountant and obviously do his books, he still doesn't click in his head that he can actually throw that away, so he can snap it at the petrol station or at the builder's merchants and put it in the bin.
Yeah.
But he doesn't. And
Well, a lot nowadays, I think they'll have like they send you a receipt over email, don't they?
yeah,
I think a lot of
Yeah.
mine, when you go to the shop and you buy it, can you put an email in for the receipt?
yeah.
Yeah, you do quite a lot of supermarkets. Not supermarkets, like
Like
Dunelm
shops.
does it.
Yeah.
So, and then when you see things like you have auto forwarding on your emails, don't you? Dex has got its invoice fetch, hasn't it? So actually, there's maybe the world's going paperless whether we like it or not.
You
Yeah,
can
I think
definitely
just
do
a
it.
side note to that, perhaps we can, as a firm, maybe every so often have to reiterate to clients, we've got all your information for your VAT return. There's nothing outstanding. Bin everything.
Yeah,
We've got it all.
yeah. If it's
Because
all
I
gone
can
through
imagine
Dex.
this Joe Bloggs, his wife sat at home pulling her hair out, having to dust around these mounds of paperwork
Folders.
that they don't need.
I think we're all well, I'm guilty of it because I've got in our spare bedroom, you know, them boxes, them ones that go under your bed, the big long ones.
Oh yeah, full of paperwork.
Steve's receipts.
Mm.
Why? I don't
That's
need
it.
them. I don't need them.
Practice what you preach.
I know exactly. You're right. I don't need them unless we're using for a bonfire night
Yeah, there you go.
coming up.
We recently asked to fill some forms in for the government, and I've got a lot of big folders in the house full of like everything you could ever possibly need, like phone bills, gas bills, every certificate I've ever had. I think I had some like Star of the Week awards from primary school still in there. I've got this folder with everything you could ever possibly need to send off something.
Who are you sending your star of the week to?
Well, you never know. You never know when you might need it. Somebody
I
sees-
used to be a star back in my day.
Yeah, what went wrong? You never, it might be on the CV there.
Yeah.
I know, Star of the Week.
Star
As
of the
if
week
you've kept that, 'cause
2002.
That's like quite a mum or
I
dad
think
thing.
it
to
was
keep-
me. It was my mum kept the folder, and when I've moved now, it's my responsibility to keep that folder safe.
Yeah, my mum's kept like little notes that I used to leave to her, like, "You are the best mum ever." Her handwriting's terrible.
Well,
on most of them.
she did find an old letter wrote to the tooth fairy. It's like, I'm really sorry, but I've lost my tooth at school. Can I still have £1?
Oh, well, those are nice things to keep.
Yeah.
We're not saying you should throw those away.
Just put them on Dex.
Yeah,
And
my
then bin
mum
'em.
keeps everything. Receipts, probably not. She probably does throw them in the bin because she don't want my dad to know how much she's spent. But anything like that, she'll keep. Loads of stuff. But yeah, it is nice sometimes to go through it.
So yeah, I think if you want to go paperless and you've got that
Do
receipt
it, yeah.
capture software, do it. Clear your loft out, get some space for more Christmas decorations or whatever you want to store up there.
Because some people actually have the receipts 3 times. They'll have the paper one. They might not have took a picture on the phone and sent it to Dex. They might have took a picture and emailed it to themselves, saved it as a PDF
Yeah.
in a document file, and then put it on Dex.
Yeah.
Funny, well, it's quite a funny question, this,
Probably a
because
bit
even I didn't know this
unique.
until me and Lauren was discussing it this morning, and I was a bit taken aback, to be honest. So I have just took over my local pub, and I am thinking of getting a guard dog. Can I claim for my expenses for my dog, i.e. food and vet bills, etc.?
Shock, you can.
No.
But there's some rules behind it. So before I worked at James Scott, used to actually look after a pub's accounts that did have a genuine guard dog. So there's a couple of rules around it. If the dog is solely bought as a guard dog, and this one in particular that I did, it was a real out and out guard dog. It was a German Shepherd. It lived outside. It was in a kennel. At night, they used to lock it in the downstairs of the pub. I mean, it was perhaps not in the safest area, so they needed that protection because obviously they're living upstairs and breaking into a pub downstairs, and pubs holding a lot of cash. There is a need for that. And I think back in the day, it was probably more common than it is now with like the addition of CCTV and stuff like that. But if you buy a dog solely for those purposes of guarding your pub, it's treated the same as most working dogs. So dogs like farm dogs, police dogs,
Yeah.
they are all allowable. the cost of buying them you can put as a capital expense. So the cost of buying the dog and the upkeep of the dog. So that includes your vet visits, your fleeing, worming, feeding the dog.
God.
If it's a working dog in whole. If it's also a pet, then you can apportion part of it.
Yeah, how would you do that? How would you choose what portion of
hours
that dog's
of the
bills
day or
is-
something.
Well,
Yeah.
well,
30 minutes stroking the dogs. That's 30 minutes you're not
yeah,
having
you'd have
back.
to have like a little book.
But back in the day, I think pubs did always seem to have a pub
Alsatian,
dog.
yeah, Alsatian
and they were
German
gen-
Shepherds.
I've seen a few
generally.
where they still. I've got pub dogs nowadays.
Yeah.
Yeah.
But I wonder if it's just the owner's pets and they just live in the pub.
I think it depends on the circumstances. So obviously most landlords of a pub live above the pub. So if your dog is perhaps a larger breed, I don't think really breed matters.
No.
We were talking about a Chihuahua earlier, but
The pub.
if your dog's perhaps staying outside or downstairs in the pub whilst you're upstairs at night to guard the pub and to alert you of intruders, then there is an argument that that dog is doing a job. And the expenses, whether it's all of them or a portion of them, they are allowable.
Yeah, let's just hope the dog doesn't start to teach itself how to pour pints or whatever at night. Or eat all the pork scratchings off the side.
Yeah. I mean, you've got quite a scary looking dog,
Oh,
but she's lovely.
she's lovely. She's a big softie.
She is.
Don't sell the burger.
But yeah, she does. If, I suppose if you didn't know her, you'd probably look at her and think, ooh, she's a big girl.
Yeah. I mean, she's dog to Border Cross, isn't she? So those type of breeds, your German Shepherds and your big guarding breeds,
The dog de Bordeaux were hunting dogs, weren't like
Were
they're
they?
a hunting dog. Well, was originally.
it's like when you've got a farm and then you have a farm dog.
Yeah.
So
yeah.
the same applies if if you're running a sheep farm and you've got a sheep dog. Or
wonder what
police
the,
dogs will all be getting their expenses deducted because
the
they're doing a
capital
job.
allowances look like for the police. I wonder how many canines are on there.
What the depreciation schedule looks like for them.
Yeah.
Well, there seems to be a lot more now. I don't know if you notice it or whether I'm just on get adverts for dogs and dog content on social media, but a lot of places that specifically train protection dogs.
Yeah.
And you can buy, I mean, they're a lot of money on some of them. They're like thousands of pounds for dog. I mean, dogs are anyway, aren't they? But perhaps protection dogs in the tens of thousands of pounds.
Yeah.
But if you need it there's a
You
genuine
need it,
need
yeah.
for that in your business, then
Yeah.
you
I
could
didn't
buy
even
one
know-
and
Didn't even know. that
offset
that
it
was a
against
thing.
your income.
I suppose you wouldn't know, is it? Because it's quite a niche. Not niche,
Yeah.
like people have dogs, people have guard dogs. But if you've never done accounts or books for a client that has a guard dog or states they've got a guard dog, you wouldn't even I wouldn't even research that rule because I wouldn't ever need
I
to.
wouldn't need to. Maybe we need a James Scott dog. James the Scotty dog.
Yeah, little mascot. No, guard dog.
I think
guard dog.
I think the same probably applies if you've got a yard or
Yeah.
if you've got a yard that your business operates out of that you don't live in and you have a dog that lives overnight at that yard and is there when nobody else is there, that is a guard dog.
Yeah, I know
Yeah.
somebody that, well, I'd imagine that they would do this. I'll probably speak to her and ask her whether they do. They buy horses. Do they call it breaking them in for
Yeah, for riding.
riding and horse shows and stuff like that as a business in Kendal? And they've got a lot of guard dogs, but to stop people from coming and stealing the horses.
Stealing the horses. So that's a livestock dog,
Yeah.
which will protect. You can get certain breeds which have that bred into them that they'll protect. I think what are they called? Is it like can't remember what they're called, but it's something
They've got
cattle
all different
dog.
yeah,
and
they've
they'll
got a few
protect.
different breeds. I mean, they've got some Alsatians, and I couldn't tell you what the other ones. They're all different breeds. There's like 12 of them.
Yeah. I mean,
But yeah, they
that's
live
a lot.
outside where the stables
That's
are.
a lot
But they've
of
got
guard
like 20
dogs.
horses, so
But if you were a burglar
Yeah.
coming to, I mean, horses can be worth
I'd be more
hundreds
scared
of
of a
thousands
horse
of pounds.
than a dog, to be honest. I went to see Lauren's horse the other week and she
Yes,
said,
you did.
stroke him then, and I was like,
She wasn't going to hear
We
it.
get
She was
guard
like,
horses for the dogs.
this is massive.
you were a bit shocked at the size of
Yeah.
him, weren't you?
She was like, oh, he's only little.
Yeah, giving
Yeah,
him a
right.
hug and getting him a headlock and giving Kate's like, oh.
Oh, this is scary.
But yeah, if you've got 12, if you're a burglar and you're approaching a stable of 20 horses to steal,
Yeah.
I mean, like I said, they can be worth hundreds, thousands of pounds
Yeah, yeah.
horses. And if you're fronted with 12 angry guard dogs barking at you,
Yeah.
you're most likely going to
Not
be...
bother.
Yeah, I think I'll leave this one.
Well, I think that probably about wraps it up for today. But like I say, thanks everyone for listening, and hopefully it's been entertaining for you to have a listen to. If you get any questions on anything that's been said today, or anything in general, come and see us at James Scott, and we're more than happy to help. Thanks for listening.
Bye.
The Ledger Lounge is brought to you by James Scott Accountants in Oldham, Greater Manchester. Please like, rate and subscribe wherever you listen to the show. To find out how James Scott can help you build a better business, visit jamesscott.com. This podcast is a QPod production. Visit kupod.co.uk for more information.